Stillwater, Oklahoma. Guys, I hope you're having an amazing week. Happy St. Patty's Day to everybody out there. I hope you're wearing green, and I hope you'll get some green tea, some green coffee, some green brewskis, whatever it is that you want, and enjoy the day. We're coming at you today with more Stillwater, Oklahoma home loan mortgage information. And today's topic is how much can I borrow? How much can I borrow? Everyone who's buying a house, first thing you need to know is how much house can you buy? And Dan is here to answer that question. Dan, thank you so much today. Have you had a great week?
I've had a great week, and I'm wearing something green. So if you can see, aloha from Hawaii. That's all I could find that was green. But no, I've had a great week, and thank you very much for inviting me.
No, we appreciate your info. A question that consumers always have is how much home can I buy? And I always tell them, only Dan can answer that. I mean, I'm not a lender. I'm not licensed as a lender, nor do I want to be. Real estate is enough as it is. So I just reference them to you. What do you go through? What's the process with someone, a borrower, when they have that question?
It's ironic that you asked that, because we in my team, the one thing I always train my team is the first question we always ask: what can you afford? Tell me the payment that you can afford. And why is that important? Because people know what they can afford. They already have that in their mind. And so we always focus in on number one, what can you afford? Then number two is what you qualify for. So the first question, anytime we meet a person, we have our standard 10 questions where we just ask them, and it's all about learning about you, your finances, who's involved, how much you want to invest, how long you'll be in the house, what's your financial goals, what's your tax. And people go, why do you ask all these questions? Because real estate, buying a home is the number one investment.
Yeah.
So we take it a different approach. We look at it this way. Let's look at this as an investment. And especially for first-time homebuyers, they're only going to be in the house a couple of years. Statistics show that. So to answer your question, the first thing we go is, hey, Josh, what's the payment that you can afford?
Wow.
Listen to them. And we
that's amazing.
Yep. We focus on that. And then once we get them qualified, we say, okay, Josh, you said $1,600 a month. You qualify for $2,600. But we're going to focus on the $1,600. We're going to focus on that. And if you want to go, and then we always ask this one question: is there anybody else that we need to talk to? Usually mama, usually husband, wife, usually you have parents, especially first-time homebuyers. There's usually somebody else involved. And we bring them all together. And we talked about it, but we never, unless the customer says so, go over that pay. We focus strictly on what you can afford, because that's the most important thing.
Man, I didn't even think about that. And like you said, if you qualify for 2,600, you may not want to be at 2,600, because then you'd be what they call house broke.
Yep. First-time homebuyers make that big decision, big error. And then on top of that, we always give them a 20-year option, especially the first-time homebuyers, because they'll only be in the house 3 to 5 years. Mortgage insurance drops off a little over 4 years on a conventional loan on a 20-year loan. You save about $28,000 to $32,000 in interest per $100,000, and the payment's only a little over $100 or less a month more.
Wow!
And when we show those numbers and then ask them to go to their accountant or financial planner, they're like, oh, "Wow, you're different." Well, it's an investment. Do the research, make the right decisions.
Yeah, and you want them to be successful with the home ownership. You don't want them to feel like they're chained to the house and not able to go to Hawaii, like you said, or go see the family during the New Year or the 4th of July. You don't want them to feel strapped. So that's awesome. Asking them, how much can you afford?
Absolutely. First thing, because you never, ever want a first-time homebuyer to be owned by the house.
No.
That is a disaster.
Yeah. Yeah. Some of the other questions that are popping up in relationship to how much can I afford is if someone, for whatever reason, just didn't want to call you, would a good guesstimate ratio be 2 to 2.5 times their annual income when it comes to maybe overall purchase price? And full disclosure, talking to you is the only real way to know it. But is that a good multiplier?
Yeah, there's two multipliers if you really want to do it. That if somebody asks me, the first one is 2.5 times your income. So if your income is $80,000, it's $100,000 home. Or if your income, if your income is 40,000, it's $100,000 home. I'm sorry, that's 2.5 times your income. Or if your income is 40,000, and then divide that out, that's 33. That's only 3,800 a month. 1/4 of that would be another good indicator, which would be about 1,200 a month for a house payment. Those are general good indicators, but there are so many factors out there that definitely blow that away, because debt ratio, the most important part I tell people is your residual income. You don't want to really look so much as your gross, but your residual, and your residual income is after you spend your money, your net money, you got left to live on.
Yeah.
Have a lot left to live on. That house owns you. You're not going to be happy.
Right.
So we focus in on the residual income. What do you have left? You pay the house, you pay the car, you pay the student loans, you pay this. This is how much you got left. And it amazes me when you do that. They go, well, we can buy more. We need to buy less, because everybody knows their costs. They might not have it written down, but right here, they know what their costs are. So that's what we focus in on. But those are two good things: 2.5 times your income, or 1/4 times your gross, 1/4 times your gross monthly income. Those are two ones that I use if somebody asks me that question.
I think what you're speaking to speaks to this exact same second question. How much is my annual gross income? Should I allocate towards my mortgage? Not, you were saying residual, so that's
Right.
after all the expenses. So that would be annual gross income minus your residual is what you were talking about on just now.
Correct.
Okay.
Yeah, that's if you got somebody that makes 10, 15, 20,000, and they net that much money, they can afford a lot more house, and they can afford a lot more money on their home, because their residual income after all their expenses is still very high.
Yeah.
If you have a person that only makes $40,000, $50,000, they can't afford as much house. Now, we can qualify for them probably for more, but when we do this to them and say, this is what you're going to have left, they're like, whoa, I still got to pay gas, utilities, food, car insurance. And so we always educate them on that. And that's where they make a good, sound investment.
That's amazing. That's awesome.
Mm-hmm.
Another question that I'm seeing online about the same subject: how much can I borrow? What all makes up that mortgage payment? I mean, it's just not primary and interest. You'd mentioned PMI falls off after 20%. What all makes up that payment?
All right, on a standard mortgage payment, and we're going to use Oklahoma, because I'm in Oklahoma.
Yeah.
You'll have your principal and interest. That's your biggest part of your payment. You'll have your taxes, which are your property taxes. You'll have your home insurance, which is your insurance on your home. Now, in Oklahoma, you're going to have two others. In a lot of cases, you're going to have your flood insurance, because there's a lot of parts of Oklahoma that are in floodplains. And the last one is HOAs. You're going to have your homeowner association dues. So typically in Oklahoma, you're going to see 5 things: principal and interest, property taxes, home insurance, flood insurance if you're in a flood zone, and your HOA, which is your homeowners association. So you have to factor all those into your payment. And usually the HOA is very small. Flood insurance does not come up a lot so much in Oklahoma City and the Edmond area, but I do a lot of business on the East Coast. I mean, East Coast, east part of Oklahoma, Sand Springs, Tulsa, Broken Bow, Broken Arrow, all flood zones.
Yeah.
Claremore, and flood insurance in some of these zones is actually more than your home insurance.
Wow.
So you've got to make sure. That's why we always target what's your payment and what's your residual. And we always focus in on that, because the last thing you want is a surprise.
Yeah.
And then for the people in the rural areas, they have, and I always tell people this, a lot of Oklahoma is rural. Like, I'll give you an example. Cache in Oklahoma, great place to live, low taxes, beautiful place. You can get a lot of land, get an affordable home. They have a volunteer fire department. Your homeowner insurance is going to be really expensive out there.
Yeah.
So that's why we educate all of our clients on all the factors, and we tell them, look, talk to your real estate professional, have them get the information for you. They're going to be your best choice as far as what the property insurance and the values and the taxes are, because they know their areas. I know mortgages. Real estate professionals know their areas. Trust them. Get a good one.
Awesome. Yeah. And last thing on the question that that is coming up is, what is better when thinking about qualifying for a home loan? Having a bigger down payment or paying down those pesky debts that we're just kind of dragging along with us? Like if there's only like $3,000 left on the car, should they just pay off the car, or does the credit card have like $1,500 on it? Should they just pay it off? What would be better, bigger down payment or paying off those pesky debts?
Josh, I want to ask you a question. And it's funny, I was a guest speaker yesterday at the Shawnee Board of Realtors, and this question actually came up.
No
and this
way.
is exactly how I answered it.
Uh-huh.
Josh, what's 0 times 0?
0.
Right. You pay off your car, your credit score will tank. You pay off those credit card debts and you have a 0 balance, your credit scores will tank. So what's the best thing to do? The best thing to do is, first and foremost, what is the payment you can afford? Second question, Josh, how long are you going to be in the house? If you tell
Maybe
me
5-7 years.
Yeah, this is a long time thing, I would say let's put more money down on the house. If you say, this is our first house, 3 to 5 years, I'd say let's put as little as we can into that house. And let's consider it as an investment. And let's look at a 20-year loan and let's put as little as we can into that house. Why? You're not going to be there long. So why would you want to invest a lot of money in a home that you know you won't be there long? Okay. So to answer your question, the first thing I ask people is how long, after the payment, of course, is how long you be at the house. Okay. My lifetime home. Then I would say put a lot of money down, go a short term, talk to your financial advisor, talk to your tax consultant, look at your credit scores. I kind of shocked the Shawnee Board of Realtors yesterday, because what I just told them, I said, in my opinion, the biggest discrimination in the United States is first-time home buyers. And they were like, what? Well, if you know a credit bureau, how it works, the number one thing that affects your credit bureau as far as a positive way is mortgage history. You don't have it. Wow. So your credit score starts at a much lower platform, first-time homebuyers. Number 2 is car history. Number 3 is credit card debt and credit card utilization. So credit cards and lower debts are a very minor thing as far as a credit score. So that's how I would answer that, is what's the payment you want and how long you can be in that house. Short-term people don't invest in the house. No. Why? Most first-time home buyers, do you realize that the interest on first-time home buyers in most cases is not a tax deduction? No, we have a $1,400 or $7,500. What is it per person? $12,000 for individual, $24,000 for family. There's no way in Oklahoma a first-time home buyer is going to get close to that. None. Unless you have a lot of student loan debt you're paying on, child care, alimony, child support, other things, rental houses. It ain't going to happen. No, it's not. So don't invest in that house. You're not going to be there long. I'll give you a really good story that I gave, and somebody that followed my plan. Is a young man came to me several years ago and said the same thing. And so we put him in a $150,000 home. He did a 20-year loan. He went and got a roommate. He charged the roommate exactly what his house payment was for rent. So he made 2 payments every month on a 20-year loan. 3 years later, he sold that house, netted $75,000. He took that money and bought a $525,000 home, put it on a 20-year loan, has 3 roommates. Each roommate pays $800 a month. He gets more than his payment and makes his payment. This guy is 33 years old now. By 37, he's going to have a $500,000 house, free and clear. No house payment. Wow. It can be done because it's an investment. That's where people fail. Treat it as an investment, because it is your largest investment. Wow. That's awesome. That's a great story. That's
That's awesome. That is so awesome. Especially for all those single people out there to take advantage of that time and make that house an investment. Absolutely.
Treat it as an investment. And this particular young guy goes skiing every chance he can. His lifestyle's the same. His debt ratio's in line. There's no change in his lifestyle. He's single, by the way, and he's fairly good looking. No, I shouldn't do that.
All you ladies out there,
you ladies want to meet somebody to make good money.
He might lose a roommate if he gets a girl, though.
Well, it's funny it's funny you mentioned that.
Yeah.
I said, why aren't you getting married? He goes, well, I might lose all 3 of my roommates. That's exactly what he said. I go, you kidding me?
Yeah. The ladies like the nest. That's how they're designed. So
yes.
Oh my goodness. Nothing wrong with that. Nothing wrong with nesting. So, oh my gosh. Wow. This has been a super informative broadcast. Dan, I really, really appreciate your time and your knowledge. You guys, if you have any questions for Dan, what's the best number to get in contact with you at?
Well, my office number is 405-437-4355, but my cell is the best way. It's 405-822-0141 because I'm always on the road. And, I have a rule of thumb. If it's from 7 to 7 and you leave me a message or a text, I'll return your call. After 7 o'clock, God bless you. Spend time with your family.
Absolutely. Absolutely. And I'll get that number updated. I meant to do that last broadcast.
That's all good.
Sorry about that. So thank you so much. Are you in any bracket challenges? Did you join any bracket challenges?
I'm already out.
Oh yeah, it was a bad day.
I had Arizona going a long way.
Oh yeah, it was a bad day.
Yeah, I had Arizona and somebody else that I had going a long way lost. I said, well, I'm done.
Yeah, and for anyone new to Stillwater, any pubs you recommend to hit up today?
Well, we're hosting 3 events today here. We're hosting one at 1 o'clock at Industry. Then we're hosting a private event from 3 to 5. And then at 7 o'clock, we are going downtown in Oklahoma City, and we have a hotel room. My wife and I and my sister-in-law and brother-in-law are all in town. And we're just going to walk Bricktown tonight and just see what's going on, because you can buy these little wristbands and just take the wristband to each place. So
yeah,
we're just going to do a series in downtown Bricktown today. It's beautiful. The weather's supposed to be great. So why not be Irish for a day? So
there you go. Well, thank you so much, Dan. We'll see you next week, guys. If you have questions, don't forget, give Dan a call on the number that he mentioned, and we'll see everybody next week. Have a good one, guys.
See you guys. Go Pokes, baby.